Silver and gold just shocked the market after one of the sharpest sell-offs in recent months. Both metals suddenly reversed, and not quietly. Silver jumped nearly 11%. Gold surged close to 6%. And traders everywhere are asking the same question. Is this just a relief bounce? Or is a new bull run quietly beginning? What makes this rebound different is the speed. Markets usually take time to recover after heavy selling, but this move happened fast. And fast recoveries often signal strong underlying demand that refuses to disappear. If you've been watching precious metals, you know sudden reversals don't happen without a reason. When prices bounce as aggressively, it usually means large players stepped in while most people were still expecting more downside. That shift in confidence is where big trends often begin. Before we go deeper, if you enjoy market breakdowns that explain what moves prices before headlines catch up, make sure to like and subscribe. On Market Analysis, we focus on the hidden signals behind major financial moves, and your support helps us keep bringing these deep insights. Let's rewind for a moment and understand what caused the sell-off in the first place. Gold and silver faced heavy pressure from rising bond yields, a stronger dollar, and shifting expectations around interest rates. When borrowing costs rise, metals often struggle because they don't pay interest. But here's where things get interesting. The sell-off pushed both metals into levels where long-term buyers quietly started returning. Institutional investors, central banks, and physical buyers often wait for these sharp pullbacks to build positions. Silver reacted even more aggressively than gold, which is something experienced traders watch closely. Silver is smaller, more volatile, and reacts faster to sentiment changes. When silver rebounds stronger than gold, it sometimes signals growing confidence in the entire precious metal sector. Another important factor behind this rebound is physical demand. While paper prices were falling, reports showed strong buying from Asia and industrial sectors. When physical demand stays strong during price drops, it creates a floor under the market. This is one of the reasons rebounds can become powerful. If sellers lose momentum while buyers quietly accumulate, price can flip direction quickly. That's exactly the kind of setup we've seen forming recently. Markets also move based on expectations, not just current data. Many traders expected metals to continue falling as interest rate fears dominated headlines. When price moves against expectations, it forces traders to reposition fast, which can accelerate rallies. This creates what professionals often call a trap move. Sellers feel confident during the decline, but when price reverses sharply, they rush to exit positions. That exit buying adds fuel to the rebound. At Market Analysis, we track these psychological turning points carefully. The biggest moves often happen when market sentiment shifts suddenly, not gradually. Another layer to this rebound is global uncertainty. Economic slowdown fears, geopolitical tension, and rising government debt levels continue to support safe haven assets. Gold and silver tend to benefit when financial confidence starts showing cracks. Silver also carries an additional advantage right now. Industrial demand linked to green energy, solar panels, and technology continues to grow. That means silver reacts to both economic fear and industrial expansion at the same time. This dual role makes silver rebounds especially important to watch. When silver starts outperforming after a sell-off, it can signal that both investment demand and industrial demand are strengthening together. Right now, the key question is whether this rebound is temporary relief or the early stage of a much larger move. Markets rarely announce trend changes clearly. They whisper first, then shout later. In the next part, we'll break down what technical and behavioral signals traders are watching to decide if this rebound has real strength behind it, or if it could fade just as quickly as it appeared. To understand whether this rebound has real strength, traders usually watch how price behaves after the first surge. Strong rebounds don't just jump quickly. They hold their ground even when profit-taking begins. Weak rebounds often fade as soon as early buyers start locking in gains. One early signal professionals watch is support formation. If gold and silver stop falling during small pullbacks and buyers step in quickly, it shows confidence is growing. That kind of price behavior often builds the foundation for longer trends. Another important signal is trading volume. When rebounds happen with rising participation, it suggests institutional money is involved. Large investors rarely move fast unless they see long-term opportunity. Silver's rebound volume has attracted attention because it rose sharply during the recovery phase. That tells analysts the move may not be driven by retail excitement alone. Institutional positioning often plays a major role in sustained rallies. Momentum indicators are also showing signs of reversal. When markets move from oversold conditions into strong upward momentum, it can create a chain reaction. Algorithms and technical traders often follow these signals automatically. Another layer investors are watching is the US dollar. Precious metals often move opposite to dollar strength. Recently, the dollar has shown signs of slowing after aggressive gains, which creates breathing space for metals. Bond yields are also part of the story. Rising yields usually pressure gold and silver, but when yields stabilize or fall slightly, metals often regain momentum. This delicate balance is one of the biggest drivers behind precious metal cycles. Physical demand continues to support the rebound quietly. Reports from major trading hubs suggest that buyers increased activity during the dip. That kind of behavior often shows strong long-term confidence in precious metals. Central bank demand for gold also remains historically strong. While central banks focus more on gold than silver, strong gold accumulation often creates a supportive environment. For the entire sector, gold strength frequently spills over into silver sentiment. Another signal comes from investor positioning data. When speculative traders reduce bullish bets during a sell-off, and then slowly rebuild positions during recovery, it often indicates healthier market structure. Sudden overcrowded trades can create fragile rallies, but gradual rebuilding tends to support stronger trends. At Market Analysis, we also watch emotional behavior across financial media and social platforms. When rebounds happen while sentiment remains cautious, it can signal early-stage trend formation. Strong bull runs often begin when confidence is still uncertain. Economic data expectations are adding another layer of complexity. If inflation remains sticky or economic growth slows, precious metals often benefit as investors search for stability. Markets constantly adjust to these shifting expectations. Another factor is geopolitical uncertainty. Precious metals historically attract attention when global tensions rise. Even small increases in uncertainty can redirect capital towards safe haven assets. Silver's industrial role adds another interesting twist. Demand from renewable energy projects continues expanding. Worldwide, panel manufacturing alone has increased silver consumption significantly over recent years. This industrial demand can act as a powerful stabilizer during market volatility. When investment demand combines with industrial demand, silver can experience stronger rebounds compared to metals driven by only one factor. However, EXPERINCED traders remain cautious. Not every rebound turns into a long bull market. Sometimes markets recover quickly, then enter sideways consolidation before choosing direction. That's why watching behavior over the next few weeks matters more than celebrating a single strong rally. Sustained strength requires consistent buying, interest, and stable support levels. In the next section, we'll explore historical patterns showing how previous rebounds after major sell-offs sometimes triggered powerful multi-month bull runs, and what lessons those cycles may offer today. History shows that some of the strongest precious metals rallies actually begin right after painful sell-offs. Markets tend to reset sentiment through sharp declines, forcing weak positions out before a new trend can build. When rebounds follow quickly, they sometimes signal that long-term buyers never truly left. Looking back at previous metal cycles, gold and silver often move through three emotional phases. The first phase is optimism, where prices rise steadily and confidence builds. The second phase is fear, where sudden corrections shake out traders and create doubt about the entire trend. The third phase is recovery, and this is where straw bull markets often quietly restart. Recoveries rarely feel comfortable because investors are still remembering recent losses. That emotional hesitation can actually help trends grow stronger over time. Silver historically shows even more explosive recoveries than gold. Because silver markets are smaller and more volatile, price can accelerate quickly once buying pressure returns. Many of silver's largest rallies started during moments when sentiment was still uncertain. One example investors often study is the early 2000s metal cycle. Gold and silver experienced sharp pullbacks multiple times during that long bull market. Each recovery initially looked temporary, but several of those rebounds eventually turned into powerful upward trends. Another lesson from history is that rebounds often start quietly before attracting mainstream attention. Early-stage rallies are usually supported by institutional accumulation and physical demand. Retail interest often arrives later when momentum becomes obvious. Right now, some analysts believe current conditions share similarities with early rebound phases from past cycles. Inflation concerns remain unresolved, government debt levels continue rising, and global economic growth shows uneven stability. These factors historically support precious metals. Silver's industrial demand also creates a modern twist compared to older cycles. Renewable energy expansion and technological manufacturing have increased baseline silver consumption. This means investment demand is no longer the only driver behind price strength. Another historical pattern involves ratio movements between gold and silver. When silver begins outperforming gold after corrections, it sometimes signals growing confidence across the precious metal sector. This doesn't happen every time, but experienced traders watch it closely. Market psychology also tends to follow repeatable patterns after major sell-offs. Investors often stay cautious longer than necessary. That hesitation slows early rallies, but can allow stronger foundations to form underneath price action. At Market Analysis, we pay attention to how narratives shift after rebounds. When conversations move from fear toward cautious curiosity, markets often enter transition phases. These transitions can eventually lead to sustained trends if supported by strong fundamentals. Another factor worth watching is how financial institutions adjust their outlook after rebounds. Analysts and banks rarely change forecasts immediately after price reversals. Gradual upgrades or shifting commentary can signal growing institutional confidence. Short covering is another powerful force during rebound phases. When traders who bet against metals rush to close positions, their buying adds additional momentum. This process can extend rallies beyond what fundamentals alone might suggest. However, it's important to remember that rebounds can evolve differently depending on global economic conditions. If inflation cools rapidly or interest rate expectations shift aggressively, metals could face renewed pressure. Markets rarely move in straight lines. The current rebound is attracting attention because it combines several supportive elements at once. Strong physical demand, technical reversal signals, and shifting macro expectations are all appearing together. When multiple factors align, trends sometimes gain unexpected strength. Still, experienced investors focus on confirmation rather than excitement. They watch whether higher lows continue forming and whether buyers remain active during pullbacks. Consistency often matters more than speed. In the final section, we'll bring everything together and discuss what this rebound could realistically mean for investors, traders, and long-term precious metal watchers moving forward. So what does this rebound realistically mean going forward? It doesn't automatically guarantee a new bull market, but it does suggest something important. It shows that strong buying interest still exists beneath the surface of the precious metals market. Markets rarely move from deep sell-offs directly into massive rallies without testing confidence first. Rebounds like this often act as signals that long-term demand has not disappeared. Instead, it may have been waiting for better entry levels. For investors, this is often the stage where patience becomes more valuable than prediction. Watching how gold and silver behave after the rebound can reveal whether buyers remain committed or start losing confidence again. The next few pullbacks will likely reveal more than the rally itself. Silver remains especially interesting because of its dual nature. It reacts to economic fear like gold, but it also reacts to industrial growth expectations. That combination means silver can sometimes outperform during early bull market phases. Another key factor is global financial stability. Rising government debt, ongoing geopolitical tension, and long-term inflation concerns continue shaping investor behavior. Precious metals historically gain attention when confidence in financial systems begins to weaken. Central bank gold accumulation continues to support the overall sector. While central banks focus primarily on gold, strong institutional buying often creates a ripple effect that supports silver sentiment. Large-scale confidence in gold frequently spreads into broader precious metals demand. At Market Analysis, we focus on understanding how these macro signals connect with price behavior. Markets don't move based on single events. They move when multiple forces quietly align over time. If this rebound develops into a larger trend, it will likely happen in stages. Early rallies often feel uncertain and fragile. Straw bull runs usually build slowly before gaining widespread attention. Another important lesson from past cycles is emotional discipline. Investors who react to every short-term move often miss long-term opportunities. Precious metals trends tend to reward consistency more than speed. Right now, many traders are watching whether silver can maintain strength relative to gold. Continued silver outperformance could signal expanding confidence across industrial and investment demand. That type of leadership sometimes appears during early expansion phases. Economic data will also play a major role in shaping the next move. Inflation reports, interest rate expectations, and currency strength all influence precious metals pricing. Even small shifts in expectations can create large price reactions. Geopolitical uncertainty continues adding support quietly in the background. Markets often underestimate how quickly global tension can redirect capital towards safe haven assets. Precious metals historically benefit when stability feels uncertain. For long-term watchers, the most important takeaway may be awareness rather than immediate action. Understanding where metals stand in a larger economic cycle often matters more than predicting daily price moves. If gold and silver continue forming higher support levels, confidence may grow steadily across the sector. If weakness returns quickly, markets may need more time to build a stronger foundation. Both outcomes provide valuable information for investors. Before you leave, I'd really like to hear your perspective. Do you think this rebound is the early stage of a new precious metals bull run, or just a temporary recovery before another correction? Drop your opinion in the comments and share what signals you're personally watching. If this video helped you understand the bigger picture behind the rebound, share it with someone who follows gold and silver but wants deeper insight into market psychology. These conversations help more people understand how major financial trends truly develop. Thank you for watching and supporting Market Analysis. Stay curious, stay informed, and I'll see you in the next deep dive where we continue breaking down the hidden forces shaping global markets.